You guys have sent us hundreds and hundreds of insurances and pensions since I started this YouTube channel 4.5 years ago. And we always see the same thing. With small improvements, you could change your financial future big time. But apparently, your pension or insurance company is not telling you what these improvements are. That's why nobody is seeing them. So let me tell you what your insurance or pension company should have told you in the first place in this PerFinEx video. To get some structure into the whole improvement process, let's separate the pensions, base pension, Riester pension, private pensions, from health insurance, public or private, from all types of other insurances, legal, disability, liability, whatever. As they all work very differently, they have different improvements. So let's separate them and talk about them one by one. Let's start with the pensions. How do you know if you have a good pension or if your pension company forgot to tell you something? The number one reason why you got a pension in the first place is that you want to make the most of your money, right? You want a comfortable retirement or retire early even. To make sure that is possible, the return should be as high as possible. And that means that the pensions with guaranteed return, which is what some of you guys have, is not what you want to have. Guaranteed return sounds nice, I get it, but the reality is that the minimum guaranteed interest set by the government is 0.25% only. In 2025, this will increase to 1%, okay, but pensions make on average 2.26% anyway. So nobody gives a fuck about this change from the government. And think about it, 2%. You can get a 62% higher return with a high yield savings account. You don't need a pension for 2% return. What you need is a pension that allows you to invest in ETFs with tax benefits. That's what you want. And if you don't believe me that this is what you want, then check out this comparison of €500 invested per month over 30 years. With 2% return, you have 246,000 in your account, and with 7%, the historical rate of return of the stock market, you have 588,000 in your account. And what increases your return even more? Low costs. Let's take a look at the following example. You can either invest in the Emerging Markets Mutual Fund from BlackRock, which costs you a 5% buying fee and 1.89% per year, or this Emerging Markets ETF from the same company, which costs you 0% buying fee and only 0.18% per year. Just this easily, you can cut costs by more than 90%, but still you invest in basically the same. And that's why the return of the ETF is a whole lot better than the return of the mutual fund. I'm not saying you should cut costs by any means necessary, because then we're talking about bank accounts again. This is the only thing which is really free. Find a good balance between a high return and reasonably low costs without over-optimizing things. I realize this is tough to do if insurance and pension is not your full-time job or your hobby. Who has insurance as a hobby? And there are a lot more improvements to come. We just started. So if you would like any help in this, you can visit our website perfinex.de with the link in the description and go to our free contract check. You just upload whichever pension or insurance you have, we analyze it for you, and then you get the report what you can improve on. All completely free and without any commitment from your side. Only if you decide after our analysis to change something, we get paid by the insurance or the pension, not by you. And if there's nothing to improve on or you don't want to make the improvements, everything stays as is. Our free PerFinEx contract check is linked in the description, so try it out yourself. Let's get one more pension improvement in before we come to health insurance. Do you have some form of insurance bundled into your pension, like a disability insurance or term life insurance, for example? This can make sense if you want or need these insurances anyway. But if you don't need the insurance, why would you pay for it inside your pension? Again, it just costs you unnecessary return and lowers your future pension. And what we see most of the times is people have insurances attached they don't need. Or if they do need the insurance, it's way too expensive. So these people would actually be better off separating the insurance from the pension. Speaking about insurance, let's start with the most important insurance of all, health insurance, because that's what every one of you has anyway. The public health insurance rises by 11.87% from 2024 to 2025. We discovered this in last week's video. And while most of that huge increase is set by the government, there is still one thing you can do to keep your premium as low as possible. Switch from a public insurance with a high additional contribution to another public insurance with a low additional contribution. Not every insurance published what the additional contribution will be next year, so we can't tell you which insurance is the best, unfortunately, but you can Google Zusatzbeitrag and then find out which insurance is the best. And in the private health insurance, this fact is even more important. Apparently DBK, one of the largest private health insurances in Germany, increased 2023 by 11%, 2024 by 8%, and next year up to 40%. This is completely ridiculous, and this goes to show you how important it is to choose the right private health insurance in the first place. I'm insured in the private health insurance since 2019, and next year my insurance will increase for the very first time by 5%. So I'll pay €351 next year, split 50-50 between me and PerFinEx for a 5-star insurance. Compare that to public with 12% or the DBK insurance with 40% increase. And it's not by coincidence that my insurance rises by 0.8% per year, while public and other private insurances are exploding. It's because I chose a high quality insurance to begin with. And if you don't like how your health insurance is increasing, then try our free PerFinEx contract check below and let's see what we can do for you. Maybe we can also improve the price to coverage ratio. It might make sense to lower the price by dropping coverage you don't need or increasing the coverage if you don't get the benefits that you want to have. So here are 2 tricks that will improve your price to coverage ratio. The first one is choosing the right deductible or co-payment. Because I wanted the lowest health insurance cost possible, I chose the highest co-payment possible, €3,000 a year. That makes sense as a self-employed person, but that would be a horrible idea for an employee because of your 50% employer match. And now before anyone thinks my insurance is increasing so little because of the €3,000 deductible, generally a good idea, but now here's the other insurance in Germany with €3,000 co-payment, which increased by 4.2% per year instead of my insurance with 0.8%. And the second trick to make your health insurance even cheaper, cashback. We talked about this in our 11 money moves before the end of the year, that public health insurance pays up to €600 cashback and private health insurance up to 45% of total premium, a lot more than €600. And if you have a private health insurance with a low cashback, switch to one with a high cashback that also allows you to do preventive checkups without ruining your cashback. And so, ladies and gentlemen, we come to the third and last big block for improvements. All kinds of insurances aside from health insurance. What can you improve in the disability insurance we talked about earlier? Most of the times we see that the coverage, the disability pension, makes no sense at all. If it hits the fan and you cannot work anymore, you get like €1,000 a month from the government. So if you have a €1,000 disability insurance, congrats, my man. You're just paying for the coverage that you get for free anyway. And the same the other way around. Not every disability insurance allows you to insure your current net income or even more. So again, it's important to choose the right insurance in the first place. Same with the liability insurance. We see a lot of couples that have 2 liability insurances, which makes very little sense in only some very rare cases. And we see a lot of people that have no family insurance, even though they have a family. And this might be very expensive if your kid destroys something, but you don't have a family liability insurance, so you have to pay for that out of your own pocket. Second to last, an insurance that gets more and more popular and necessary, the legal insurance. Not long ago, someone reached out because he thought he had a legal insurance, but then his tenants started making trouble, and only then he found out that the landlord coverage was not included in his legal insurance. Oopsie daisy. And lastly, household insurance. Do you have the right square meter of your home? Is the right stuff included if you have expensive electronics or a lot of valuables at home? And most importantly, this glass edition is most of the times super expensive. And almost every glass is excluded anyway. So you might want to get rid of that one. What did we learn in this video? Insurances and pensions can be a very complicated topic and also a topic that is not fun for most people. I don't understand why really. I love it. But maybe that's just me. And with almost everyone we talked to over the last 4.5 years, there was something to improve on. Either we can increase the return on investment, lower the costs, or increase the coverage. So it would be actually time well spent to check your finances every once in a while. And if you wonder if there's something to improve for you as well, then try our free PerFinEx contract check with the link in the description. Try it out and let me know in the comments below what you think. I thank you for watching until the very end, and I see you in the next video.